so before we jump over to and have a look at the charts and have a look at the US dollar index and oil, let's go and have a look quickly, and we're not going to linger too long, similar to last week, we're going to do this a little bit quicker, is the fundamental assessment for the week ahead. So, I'm going to bring up the charts here, okay. So we should get the Forex calendar appearing on the screen any second now. So you can see that we already have this morning, we had the cakes in manufacturing PMI. Now that came out of China. However, for those of you in the room before, you'll know that when we have Chinese news like this, what you want to do is, although China can affect the global economy because it produces so much and it's so intertwined and it's such a big player, generally speaking, you want to look across to the Australian pairs because China is a huge import of Australian raw minerals and raw materials. So if you have Chinese news like this, you want to have the Australian pairs because that's good for China. Usually you will see a positive influence on the Australian dollar. If it comes out negative for China, you will see a negative influence often on the Australian dollar, because obviously if the Chinese economy is good, they will buy more, and if it's not, then they will buy less. So we had that coming out this morning, so we don't need to put that in. Let me just get rid of this here. Okay, so scrolling down the list, we can also see that we had the manufacturing PMI, so we don't need to put this in either. It is also, by the way, a Canadian bank holiday today. Now, although it's going to deprive the markets of liquidity somewhat, it's not going to provide it it's not going to deprive it of liquidity as much as it would, say, a UK or a US bank holiday, which are the two main financial centres. So we're not going to pay too much attention to that fact today. We can, however, see we had manufacturing PMI come out this morning on the pound. Now we're going to go back and look, when we look at a couple of the pound pairs, and what we're looking at for this week, you can see that we'll be using this pound news, this negative pound news, to form some kind of retracement on the pound pairs, which we're going to look to profit from for the rest of the week. But we'll come back to those at the end. Now, getting on to the stuff that hasn't come out yet, we have ISM manufacturing PMI coming out at 3 o'clock, as you can see here. So we're going to, that's the first one we're going to put down. And in fact, I'm not going to put the fundamental assessment up just yet, because it'll be quicker to do it without putting it on the screen. So we're going to put down, I'll just show you what we do for the new people in the room. You see we have a spreadsheet like this, and you can see we will class ISM PMI, in fact, as, we're going to put it down as a small x as opposed to a capital X, because it's not an interest rate decision or anything like that, but just bear in mind, manufacturing PMI, especially for the US dollar, it can provide quite a bit of volatility, so this is one to pay attention to today. Then later on we have the MPC, which is the Monetary Policy Committee member Haldane speaking, Andy Haldane. Now he is the chief economist of the Monetary Policy Committee, so what he says could have an impact on the pound fairly significantly. So we're going to put down a capital X. I'll show you, we'll bring up the fundamental assessment chart spreadsheet at the end. So that's what we have for today. So we do have some potential moves in the market today. Now, one of the big events coming out for this week is tomorrow morning. Now that is Australian cash rate or interest rate decision, as you can see over here. Now the interest rate decision, which is coming out tomorrow, and the statement which follows, that can move the market in quite a significant way. Now, the Australian, or the RBA, has been saying that they don't see, or rather what they've been saying is they see raising interest rates would be counterproductive, so we don't expect any change in interest rate decision. So really this will come down to what is said in the statement afterwards, as depending on what's said in the statement, whether it's hawkish or dovish, will determine whether we see price moving up or down. But either way, it does have the ability to move the markets fairly significantly. So we're going to put down a large capital X tomorrow for the Australian dollar. So I'm just going to put this in now. Then we can see also tomorrow we have construction PMI, which is something to pay attention to. However, we're going to put that down just as a small x. But looking over to Wednesday, we have services PMI. Now, we're going to put services PMI down as a capital X for the Great British Pound. Now, why are we going to, and that's on Wednesday. Now, if I bring this over here, you can see we have a small x down here for the manufacturing PMI on construction PMI, sorry, on Tuesday, but we have a large X for the services PMI on Wednesday. Now, the reason for that is because the UK economy is mainly made up of services, insurance, this kind of stuff, etc., etc. So the services PMI for the pound is often the most volatile out of the PMI. You've got manufacturing, construction, and the services. So we do need to pay attention to this, and we are, in fact, when we come and look at some of the pound pairs in a bit, once we've done this, you will see that we are going to try and position ourselves, try and take advantage of this. This services PMI on Wednesday. This is something that can provide a lot of volatility, can be used as a catalyst potentially this week. So if we scroll down a little bit more, you can see we have FOMC meeting minutes on Wednesday. Now, FOMC meeting minutes does have the potential to move the market as well. However, we may find that with non-farm payrolls, which we're going to see in a minute. In fact, if I scroll down here, you can see non-farm payrolls down here. Where is it? That's on Thursday, so scroll down a little bit down here. You can see non-farm payrolls down here on Friday, which really, generally speaking, is the headline data for this week. So we're going to put down the FOMC on Wednesday evening. We're going to put that down as a capital X. So Wednesday evening, US dollar FOMC. Then we have, as we scroll down, Aussie trade balance coming out on Thursday. Now, we're not really going to put anything down for the Aussie because unless that is wildly divergent from the forecast, then you probably won't see a huge amount coming from the trade balance. It can provide volatility, but it's not in the same league as the interest rate decision, for example, coming out tomorrow morning. So we can see we've got crude oil inventories, and for those of you who have been in the webinar before or who attend the live room, you know that we put down an X next to the Canadian dollar with crude oil inventories because it is a large oil-producing country. So oil has a correlation with the Canadian dollar. When the price of oil is going up, it's better for the Canadian dollar, and when the price of oil is going down, it's worse. So we'll put down an X for Thursday for the Canadian dollar. So we'll bear that in mind. We also have ISM non-manufacturing PMI on Thursday as well. So we put down a small X for the dollar. And then coming on to Friday, obviously, we will put down a large X for the non-farm employment change down here. We do also have G20 meetings for all the currency pairs. So we're just going to bear that in mind. Carney is speaking as well at the G20 meetings, as you can see. So we also, we have Fed monetary policy report coming out on Friday as well. So we have quite a lot of data coming out on Friday. So you can see already, if I put the completed fundamental assessment up for you, give me a second. And Canadian employment change as well, put down as a small X. So, and we've got the manufacturing production coming out for the pound as well, but again, that will just be fairly small for the pound. It's not expected to be anything, unless, of course, it's wildly divergent. So, just having a quick look at the fundamental assessment, we can see here now for this week that we have, with the US dollar and the pound and also the CAD, we have some really significant data coming out on Friday, because we have two significant pieces of data coming out of the US, non-farm payrolls no less, and the monetary policy report. Or is it financial stability report? Sorry, let me have a quick. The monetary policy report. No, I was right. The monetary policy report. And then also we have Carney speaking in the G20 meeting. So you could essentially put headline data for a few of the other pairs as well, like the euro, if you got the G20 meeting. So looking at this now, what do we see? Okay, so we can see that we have fairly clear data on the euro pretty much all week, although we know the US dollar will affect the euro as well. We have pretty much clear on the Japanese yen pairs. We have a lot of data coming out for the pound, so we're going to trade the pound a specific way. We don't really want to be getting in and out of pounds this week. We want to trade it a certain way, which we're going to be talking about in a minute. We can see we pretty much have a free run on CAD, Franc, Aussie, and New Zealand. So looking at this, we can see that the plan for this week is going to be we are pretty much going to look to get involved in any US dollar pairs fairly early on in the week, and we're going to look to hold these throughout the week. Similarly to the pound pairs, any pound pairs we're going to look to get involved early and hold them throughout the week. And then with the euro, Japanese yen, the franc, and the CAD, we can pretty much get involved with these in the first few days of the week, no problem. Looking out only for the interest rate decision on the Aussie, so we'll probably wait until either position ourselves in early today, or we'll wait for this to pass, and then we can look at the Aussie over here. So let's go and now have a look at the actual currency pairs. Now we know what the plan is for this week and how we can look to trade these. So the first one we can look at is the, let me see what one we can have a look at. I'm not just going to go through the majors because the majors are providing some of the better opportunity for this week. So the first one we're going to go to is the euro pound. And in fact, before we do that, we will just do, as we normally do, the US dollar index and oil. Okay, so if you could let me know when the US dollar index is back on your screen, it should be appearing on there any second. Yep, it's on the screen. Okay, excellent. Thank you, Gordon. Okay, so looking at the US dollar index. So last week we were looking at, and I can see this is a different chart to the one that we were looking at. I think this is actually from last week. I'm not sure. But we do have a bottom of a range here. We do have a bottom of the range that is here, for those of you who watched the Forex forecast. And we did have an intermediary point here on the US dollar index. Now the US dollar index is important because if the US dollar index is going down, generally speaking, you'll see the euro, the pound, the Aussie and New Zealand going up. And if the US dollar index is going to the upside, you'll see the euro, the pound, the Aussie and New Zealand, generally speaking, going to the downside. So this is why we look at the US dollar first, as the first thing we do before we look at any currency pairs. Now you can see there's a bottom of a range here, which price has been bouncing between. So you can see you have a bigger range like this. And you also can see that there's a intermediary range here as well, as you can see price doing this. And then when it got back above here, it came back up to the top and back down here. So what we were looking for last week, we were sitting up here and we were looking for a trade back down to the intermediary range down here. And you can see when it came down to here, it actually broke through and it found its way all the way down to the bottom of the range. And it broke out of the bottom of the range and it started to pull back, having found support at a significant area of support at 12,080. Now, the good thing about doing this on a Monday after the Forex forecast is things can change slightly, so we can have a more up-to-date view. Now, what we said in the forecast was we're sitting at this point here, and we were going to look to trade the US dollar index potentially either way. So if we're going to break back above the bottom of the range at 12,104, we were going to look for a rally into the intermediary point of 12,147, which we can see it's already on its way. Now we might get a little bit of a pullback like this before we get a move back up to here, But generally speaking, we're going to be looking at the 12,147 over here, which means that we would expect at least a pullback or a retracement in some of the US dollar pairs like the pound US dollar, the euro US dollar, the Aussie US dollar, for example. So before we go to oil, if you can, just to give you an idea of what I'm talking about, we go to the euro US dollar. Now we were, as you can see, trading up, and we're accumulating in this area. So although we're expecting higher highs, we were only going to look to trade this to the upside as long as the US dollar index stayed below the bottom of the range like this. But it hasn't, it's now broken up. So you can see now what we're looking for is we're looking for a potential retracement on this. Now we could actually get a retracement on these pairs back down to say the top of the range here, because you can see you have a big range like this. So we could be looking at a breakout and a pullback, but we're not going to be looking at trading these to the downside, because this would be a counter trend move, and really we only want to be looking at trading with the trend. So I'm going to get rid of this, and we're going to go and have a look at oil, and then we're going to look at the pairs that we are looking at trading this week. Now oil was in a large downtrend, as you can see, and we actually got a breakout of the downward sloping trend line, and it did start to trade to the upside from this. For those of you who have been following the forecasts, from this key level of support at 42.180. Now the reason we look at oil again is because of what we discussed earlier. It correlates with the Canadian dollar, so when it's going up, the Canadian dollar generally speaking goes up, and vice versa, and the same with, say, the Mexican peso or any oil producing country. So having found support down here at the 42.180, we did get a break up outside of the downward sloping trend line, and also a break above the 43.725 or the 75 area roughly. And we said, although we haven't got it highlighted here, we did say we were looking for the $45 a barrel mark in the previous forecast, and we got up to here and we found resistance at this area, but as you can see, it didn't really sell off, and we didn't get much of a push to the downside, and instead it started to break up. So we are now looking for oil to push to the upside, and we're looking up towards, in fact we slightly revised this on the previous forecast, up towards the $47 barrel mark on oil. So we do expect a little bit of strength coming in, or at least to the $47 barrel. So if you're looking at trading US dollar CAD, maybe you're looking at trading something to do with the pairs, just bear in mind, if this is going to push up to the $47 a barrel mark, and say you're looking at trading a pullback, you may find the pullback is a little bit deeper before it starts to push to the upside. So bear that in mind if you're trading any oil correlated pairs. So with that said, well, let's go and have a look at the first pair that we're looking at this week. Now the euro pound has been struggling somewhat of late, because as you can see, price has been squeezed. In fact, you can see here, and price has been getting squeezed, and then it sold off, having traded into the key area of resistance at 0.88372. Now this is a very significant area of resistance up here, and as you can see, the sell-off was quite sharp. We are now getting a kind of accumulation in this area. So what we're now looking for this week, we are looking at trading, taking some short positions, and we're going to be looking for some bearish formations in the euro pound, and we're going to be looking down towards an ultimate target of 0.8656. So the only thing to bear in mind is that we did have some negative news coming out for the pound this morning, so we're hoping that this is going to push back a little bit. Now we may get a retest of the resistance up here. However, this may also be a little bit ambitious. As you can see, price has started selling off, and it's continuing to make lower lows. So whether we get a pullback up into this area, or whether we start to see bearish formations appearing in the area it sits now, is yet to be seen. But either way, we're going to be prepared to look for shorts on this pair with a target of 0.865. Now, because of the weekly fundamental assessment, if I just bring it back, you can see we have some strong news coming out on the pound this evening, about 6 o'clock, and we also have the data coming out, services PMI on Wednesday. Now, what we would like to see is we would like to see this retracing into this area like this, and then either before the large news announcement comes out this afternoon, maybe with a bit of a bigger stop, a technical stop, or after the speech comes out this afternoon, we will be looking at entering the shorts on this pair, because we should be able to get all the way through to Wednesday with some extra room on the trade. And then when the services PMI comes out, if it comes out positive for the pound, obviously that will be good for the euro pound, and it will push it to the downside, and it could act as a catalyst. So, and if it comes out opposite, if it comes out bad for the pound, you may see this spike up a little bit and be volatile. But if we've got our stop in place, it may be down in this area by the time it comes out, which would be nice. So that's how we're planning the euro pound for this week. So the next, one of the next opportunities we're going to have a look at is the Euro Aussie. Now the Euro Aussie has formed a bull flag, for those of you who know your patterns. Now, bull flag is a continuation pattern, so we are looking for a continuation of this move to the upside. Now, one of the problems is that we do have the interest rate decision coming out later on or tomorrow morning. So the trouble you have with that sometimes is you can find that the price doesn't really move very much before these come out. But we are looking for a continuation in the Euro Oz. Now, whether we have to wait until after the announcement, or whether, you know, looking at, in fact, we positioned ourselves in one of these this morning. So whether that stays and goes from there, or we have to look again after the Aussie interest rate decision is yet to be seen. However, we don't have the targets on here because, as I told you, the charts unfortunately got corrupted. But I'll put them on because I do know what they are. Now we're looking at this as a key level of support and resistance on the Euro Aussie, because as you can see, it was tested numerous times over here as resistance, then it was broken as resistance, and then when it came down, it tested it as support a number of times as well before breaking through, coming back and testing it as resistance. Now you may be saying, okay, but this hasn't actually tested it here, and it hasn't tested it here. But what you have to remember is it areas of support and resistance, but they're not specific levels as such. So you can be looking at a buffer, like this, for example, depending on the current paired buffer is obviously going smaller. So we're looking at this now as being fulfilled as a pullback. We're looking for a continuation of the bull flag, and we're looking for this to continue. And we have a target on this, I believe, of, if you give me a second. I can just check. And we're looking up towards this area of resistance over here. So it should be fairly clear to you to see why we're looking for this this level over here. You can see that this is a significant level of resistance, been tested once, twice, 3 times, and when it was broke over here, came back and confirmed it over here before selling off. Now, if it sold off, if it broke down here and it made its way up to this level up here, it broke down below this level and it made its way back to down to this level here, then it's a very what's the word, the best unit to use? Statistically, the odds are in our favor for a move back up to retest this as a potential range top or an accumulation top over here. So this is what we're looking at in the Euro Oz. Now, again, we do have Aussie interest rate decision, and Aussie interest rate decisions can turn markets, or interest rate decisions and statements in general can turn markets on a dime. So it really is a gamble if you're going to take this going into the Aussie interest rate decision. But If the Aussie interest rate decision passes and we're still accumulating somewhere in this area, then you can see that we don't have anything really for the Aussie for the rest of the week, and nor do we really have anything for the euro directly. So this could be a good opportunity for the rest of the week to look to initiate longs up to the target in the euro Aussie. So that's one of the opportunities that we're looking at, and that's the euro Aussie. Now, another opportunity we're looking at this week is the New Zealand franc. Now the New Zealand franc, as you can see, it has sold off pretty sharply from the resistance area of 0.71048 that we have highlighted here, and it is now forming a pattern, a continuation pattern. It's accumulating in this area. We're getting a kind of a pullback, and it's forming somewhat of a, possibly, just looking at the 4-hour chart, I have to go down the lower chart to know exactly what it's doing, but it's forming what could be regarded as an expanded flat, which is essentially a variation of a sideways move. Now, that is a continuation pattern, and therefore we would be looking for further declines in the New Zealand franc. So the question remains, if we're looking for declines in the New Zealand franc, where are we going to be looking to? Where is a good target for the New Zealand franc for this week? And if we go down and have a look at the targets, let me just check our targets, because I do have other screens here, but I just need to check the right one for you. So we're looking down for a target on the New Zealand franc to around the 0.6950 area, you could say, which is down here. So if I put this on for you, you should be able to see this is a very clear support and resistance area. So you can see going back all the way over here, it has acted as support, broke through, failed as support, came back and tested as resistance, although we would probably all agree this is a fairly deep test of this level. However, what you have to remember is this level comes from a bigger time frame, maybe on the daily. So when you see a big spike through like this on the daily chart, what you're probably just seeing is a single candle like this retesting this. So it looks like a failure of this support level here to act as resistance over here, but in fact it's just because it comes from a big time frame. So you want to remember that when you're looking at these support resistance levels. If you get one in, say, a 4-hour time frame like this, you will get a shallow retest. But if you pick one from a bigger time frame, then you're going to need to get a bigger buffer because you're going to be testing it on a bigger time frame as well. So something to remember. But you can see here, tested back here as resistance, broke back down, came back, tested as resistance failed, came back, tested as support, and now it's moved up to the top where we're sitting now at the 0.71048. So what we need to see now on the New Zealand franc, if we go and have a look at the weekly fundamental assessment, you can see we don't really have anything on the franc this week, and we don't really have anything on New Zealand, which is great because it means we can get involved in this pair with a very tight stop somewhere in this area, because where it's going to turn we don't know. We're just waiting for bearish formations to appear. Now it could be pulling all the way back up and retesting up here, or it could be looking to turn somewhere around here. So let me just get rid of the fundamental assessment. So that is what we're looking for on the New Zealand franc. And let me just double check this for you, because I just want to make sure. mean, we actually have a little bit lower. In fact, I think we're looking at this level here. This is the area. This is the area. This is the more specific area. So as you can see, it's still the same area, but it's a bit of a more specific level. It's coming and testing here, failing, pulling back, pulling back, pulling back, pulling back. So this is the target that we're looking for on the New Zealand franc, because I just double checked it on here. I thought it looked a little bit high up. So if we get the bearish formations and patterns that we're looking for in this area, bearing in mind it could come back even all the way up here to retest this level, then we're going to be looking for a trade down to the 0.6910. And finally, we're going to look at the Australian Canadian dollar. Now, we know from looking at the oil, we have oil moving to the upside. So if we have oil pushing to the upside, it means we're going to have the Canadian dollar pushing to the upside as well. And if you have Aussie CAD and you have the Canadian dollar going up, it means you're going to have a negative push down. It doesn't mean the Aussie is definitely going to go down against the CAD, but it means you're going to have a negative influence on the Aussie dollar compared to the CAD. So if we know that, and then we have a look at the some of the technicals on the Aussie CAD. Now you can see here we've been in a consolidation pattern or a consolidation point on the Aussie CAD for a while, and we do have a significant level. Again, I'm just doing this from eyeing the chart now because I can't, unfortunately, all the levels disappeared. But we have a significant level here on the Australian CAD, and we are looking for a trade down to the, let me just get the target. Again, usually I will have all the targets ready on the screen for you, but I haven't got them this week. So we're looking for a target on the Aussie CAD of 9.8, around 8.50, say. So you can see this is a well-defined area of support resistance in the past. And we're looking for a retest. And you can see here in the past as well, when it came up and it failed below the 99934, it came down to the 98850. When it failed at the 98850, it came up to the 99934. When it failed at 9934, it came down to 98850. Then when it failed at the 98850, it came back up to the 9934. So hopefully that should be quite clear to you. So if we're going back down and we see a failure at the 99934 area over here, it is a good plan to look for the 0.98850 to the downside in the Aussie CAD. Now again, we'd have the interest rate decision coming out of the Aussie CAD, which can significantly move the market, and it can also break this back into the range, consolidation range, and it can in fact break this out of the range like this for continuation to the upside. So just bear that in mind for those of you who trade the bigger stocks or who perhaps trade with important types of volatility, you can look to use as a catalyst. But for those of you, maybe if you're new, we recommend trading the and you take trades, maybe in the lower time frames. Then maybe the best thing to do is to wait for this to pass and then look for the opportunity after the interest rate decision comes out, which will be maybe at the London Open tomorrow morning or in the New York session tomorrow. So there's a few of the opportunities that we're looking at for this week. Hopefully that will help some of you, and maybe it fits in with some of the stuff that you're looking at. So are there any questions? What we'll do is we'll open up some questions for the next few minutes, and then we can wrap it up because we've got coming up to 1:45 now, so we're pretty much over time. So I'll just give a minute for anybody who has any questions to type in. I can see Gordon says he doesn't have any. Thank you, Gordon. That helps me out because then I know. But unfortunately, I can't see who's typing and who's not. So if somebody is typing a question, we just have to give them time to put it in. So it's 12:44 now. So what we'll do is we'll give it, say, 30 seconds, or we'll give it up to 60 seconds, just to allow any questions. I can see, looks like somebody actually raised their hand, which was Joel. Now, I don't know 100% Joel, but if you've got a question, I think if you put it into the chat, is it in the chat or is it in the questions? I'm not 100% sure. Oh, it'll be in the questions, won't it? Yeah, in the question box on the right-hand side, if you just tap it in there. Okay, so it doesn't look like there's any questions. It's now 1:45. Okay, so Ravi says, what do you foresee Euro US dollar for this week, please? Okay, so let's go and have a look at Euro US dollar, Ravi. So what I see on the Euro US dollar is, let me just get rid of some of the, so the reason I didn't go through the Euro US dollar as such today is because this is the problem I have on the Euro US dollar. So we have a significant resistance level at 1.14637 over here. Now this is trending to the upside, and I do expect to see a continuation to the upside. And in fact, what we are forming now is a bull flag. So I'm looking for this to continue to the upside. The question is it going to come from here? So there's a couple of questions on the Euro US dollar. Is it going to turn around the area where it sits now, where it could very likely, which would be a continuation of the bull flag? In which case we'd be looking for an overall target of 1.15290. Now, the only problem with this trade is we do have a very significant resistance level at 1.146, which does have the potential to push it back to the downside. So that is one of the problems I have on the Euro US dollar at the moment, because if I get involved with it down here, I'd have to have a very tight stop, because I would have to be able to take my profits at the very least, or at least get a fairly decent profit by the time I get to this level. So if it turns, I can just close the trade out. However, I am looking for this to go up here eventually. So what I might like to see is either a pullback like this and then a trade up to here, or possibly a trade from this area here up to here, maybe manage it at this level, looking for the target up here. Or the only thing was we could see this. So if we go back quickly to the US dollar index, Ravi, if we are looking for the US dollar index to come back up and test the intermediary point up here at 12.147, we could be seeing a pullback and a move up like this. Now, if we have that occurring in the US dollar index, then what you're likely to see, and I'm not saying it's definitely going to happen, but obviously what you're likely to see is a deeper pullback, probably to the range top. So in terms of Euro US dollar, Ravi, what I think I would like to see is this. We put everything together. What I would like to see is the US dollar index. I don't know if you saw that, by the way, if the screen. Okay, so I'll give the screen a little time to flick through, because otherwise I think I might be doing it too quickly. So what I think I'd like to see here, Ravi, is maybe a pullback in this area and a trade up towards the 12.147. And when we get into the 12.147 area, this is going to be a good place for the bears to take control of the US dollar index and push it back to the downside, maybe, even if it's a retest just to the previous level of 12.104, or even a retest of the major support at 12.80. So if that is going to be the case, then what would be nice to see in the euro US dollar, which we are looking for further moves to the upside at some point, would be a pullback down to the range top as the US dollar index pushes up to the intermediary range point. And then if we start to see the US dollar index selling off, we can look for bullish formations and patterns to form in this area. Then we'll have a really nice target, and we'll have a really nice risk to reward even up until the resistance at 1.146, but looking for the targets to further up to the upside. So does that make sense, Ravi? Yep, okay, fantastic. So in short, just to summarize, we're looking for a continuation to the upside, but if this is a resistance area here, a buy from here might not provide us with a good enough risk to reward, in which case we're probably just going to leave it. However, if we do get a bigger pullback and US dollar index pushes up as we expect, this could provide a really good opportunity in this area for bullish formations and a place to initiate longs. You're very welcome, Ravi. Okay, so are there any other questions? We'll just give it 15 seconds this time. And then if there's not any other questions, we can call it a day. You're very welcome, Gordon. This is a good opportunity for any of you guys. If you want to ask me about any of the currency pairs, I'm more than happy to have a look at them for you. But what I try to do on a Monday is to give you guys, to give the Portex people some of the better opportunities in the week. So for example, you can see we bypassed Euro US dollar because of the structure at the moment. So that's what I try and do for you guys on a Monday, so you can go away from the webinar and actually use use what you've learned in the webinar, what you've seen in the webinar for the week ahead. So it doesn't look like there's any questions, so I'll just hand over to Ben if he's got anything left to say before we wrap up.
Yeah, that's great. Thanks ever so much for that, John. And thanks for taking your time out at Ethical Trading Institute to spend a bit of time with us today.
No problem.
Is there an email address that you can give to people? Just obviously, guys, if you want to reach out to support@portexmarkets.com, you can do. We'll help to address your questions as well. But is there an email address where they can reach out and maybe ask any questions or inquire about what you do over at Ethical Trading Institute?
Yes. What I'll do is let me just put in. I'll drop in the email there for you because I guess we don't really push it very much.
Mm-hmm.
But we've got the. I don't know if that's gone into the. Chat there. Let me just.
If you just put it to all audience, entire audience, John. You've got the option down the bottom on the chat.
Audience, I'll chat entire audience. Okay, yeah, I see it now. I see. To all. So let me just see if I should have come through there. Has that popped up?
That's at info@ethicaltradinginstitute.com. Yeah, so do put any questions or inquiries that you've got about what they do over at Ethical Trading Institute across that email address, guys, and you can also reach out to your dedicated broker at Portex if you have one. We'll be doing the same thing again, John, next week.
Yeah, no problem.
Great stuff, and we'll be running a separate webinar on Wednesday that you'll get an email about anyway. But aside from that, I'd like to take the opportunity again to thank John, and we'll see you again next week.
Okay, thanks guys. Take care. We'll see you all next week.
Thanks, guys. Bye-bye.
Bye-bye.